For shareholders of Pestech International Berhad, who probably bought last year at $1 or 80 cents, I'm pretty sure they're seeing red in their portfolio today because it's roughly about 30 cents. Now, in this video, we're going to explore, first of all, the business nature of Pestech. Are they doing well financially as a business? What are the risks involved if at this low price, is there a certain margin of safety? And are they going back or pivoting towards their core business, which is engineering? And we'll evaluate all these risks and more. So stay till the end of the video to find out my thoughts about them. As a disclaimer, I do not own any shares of Pestech International Berhad, and whatever I share is purely for educational purposes only and to help you build investing framework to be able to make that decision on your own. So do speak to a licensed advisor if you do need licensed advice. So what does Pestech do as a business? Now think of them like your home electrical contractor, but doing things at a much, much larger scale. So their business divisions or business units, if I were to call them that, are divided into 6 segments. The first segment is actually this thing called power transmission lines, and power cables. Second is the power generation. Third is HV, which stands for high voltage, and EHV, which stands for extra high voltage electrical systems. They also have 3 other divisions called infrastructure, asset management, rails, electrification and signaling, and last but not least, power products and smart grid. Now, their biggest revenue contributor is actually this segment called EPMCC, which is really their engineering services arm. And the other small little divisions like product only contribute very, very minuscule, less than 10% of the revenue contribution. So all that EPMCC is all those 6 divisions that you looked at. 5 of them are lumped into one, with just product being segmented as a different part of the business. So really, they're an electrical engineering company all the way from your transmission lines, building rail and signaling, electrical signaling, and they became well known because of delivering the MRT2 project and most recently winning the Aerotrain project for KLIA, which they're partnering up with Bombardier. Now, one of their biggest revenue contribution geographically outside of Malaysia is in the country of Cambodia. And what actually piqued my eye was because they disposed of their transmission system project in Cambodia. And it was quite a sizable disposal because it was 118 million, which at the point of this recording, 118 million multiplied by roughly 5 times is about 500 million Malaysian ringgit. Now, if we look at the market cap of Pestech today, what is the market cap? The market cap is actually about 300 million, guys. So the disposal of one of their subsidiaries is already larger than the market cap of the entire holding company in Malaysia. So it makes you wonder, why did they dispose of something so big in a country that they were well versed in doing business in the Asian region, which is Cambodia. So before we proceed, let me now explain a little bit of the intricacies of the engineering, procurement, construction, commissioning kind of revenue generation model. So what happens is this. Let's just say you want to build an infrastructure. In this case, Pestech's foray is actually into electrical engineering utilities, which consists of either mainly transmission lines and also railing systems, electrical rail systems. So if you're an EPCC, what you do is you have to go out and bid for contracts, and it's awarded by either governments or asset owners that are very government linked. And most of the time, the biggest struggle is actually financing the project. And sometimes the government partner, they call it government-private initiative, partnership initiative. And some countries like Cambodia, without government being able to cough out all these costs, they invite companies like Pestech and say, hey guys, can you build this for me? I can't finance you now. You have to find your own financing. However, we'll convert that into a concession where you actually collect some sort of a toll or some sort of a repayment over a certain period of time so that we can we can actually pay you for the liabilities that you have incurred because of forking out capital to build this project. And therefore, you think of them, if I were to simplify it, you think of them like a REIT, kind of like a REIT. They'll build the building for you. They collect rental, but in this case, the rental is collected from the government, and it is actually they'll pay off for incurring all these working capital costs and the debts that they take to finance this project. Obviously, these are mega projects. Even like the KLIA Aerotrain is like 900 million Malaysian ringgit, close to $1 billion. And they do have the engineering expertise. And I think for them to secure these kind of large projects, one of the incentives that they had to give to the contract awarder is actually coming out the end financing. And there's always been a struggle because China is doing that to a lot of developing countries, especially in Africa, because they cannot afford these infrastructure projects. So China will come in and they'll say that I'll get my contractor to come in, I'll get the financing done for you. But in the end, what happens is there's also a political risk because you're kind of like indebted to China. And in this case, Cambodia was probably a region where Pestech thought that they could actually grow their presence because there was not many local players, and they were JVing a lot of local players to actually build this industry up from scratch and bringing in their expertise and bringing in their experience. So I think that was the right strategy starting off these businesses in Cambodia. Here comes the problem. If you get your numbers and you are calculating a rate of return for a certain percentage before you break even, let's just say you're going to come out of financing costs, you're going to pay up all the interest on the debt, you got to figure out where is the break even point where the returns on all this project is going to like give you profit, a certain profit. And I think with them with Pestech financing so much of this cost up front, they were actually struggling to actually make money. And if you look at the balance sheet, they actually ballooned. And prior to this, they were a pure play, kind of like a pure play electrical EPCC contractor. They were very good at it. They gained their reputation delivering like mega projects here and abroad. And for them to expand, I think they tried to convert all these projects into something like a concession. And what happens is that you load up your balance sheet, and when you load up your balance sheet, that's where you have to struggle to pay off all these debts and interest expense. So as you can see here on the balance sheet, the short-term borrowings as of the latest 12 months is roughly about 461 million. Long-term debt, 782 million. Remember, this company is on a market cap of 300 million, so they're like 3 times. The debts are actually 3 times that of their current market cap. Obviously, when it was at $1, obviously it was like almost $1 billion, which is almost equivalent to the debt. But while I'm not saying that this is entirely bad, the nature of the business requires them to take on all this debt to finance all these projects. However, what you may want to look at is this: looking at the size of their assets, which is roughly about 3 billion. What you want to do now is to see on an asset size of about 3 billion, what kind of cash flow are they generating? What kind of profit are generating? Because if you were to use the analogy that I used just now of a REIT, you finance the building and you're getting rental in return. And in this case, they're getting a concession. They're getting some kind of a payment from the government for them building this transmission line. So at the asset size of a 3 billion, what are you getting in terms of profit and in terms of cash flow? And they've struggled every year to make a positive operating cash flow, obviously because of the huge debt they're taking, and also I think because the small amount of net income that they're also getting. I mean, you're looking at it, revenues of 700 over million, operating margins are so thin. Gross may be high, 22%, but operating margins are just so thin at 4.7, and you're getting a net income of 30 over million on a revenue of 700 million. So that you're talking about less than 5% kind of net profit returns. Then when you add back depreciation and you amortize and all this, and plus you've got a lot of construction profit you can't realize, and it comes into your receivables and you knock that off. That's why it's not easy to actually have positive operating cash flow. When you don't have positive operating cash flow, what happens is that you get negative free cash flow. And we have negative free cash flow, and you still need to invest in capex to actually grow the business and to grow your concessions and to grow your asset, especially for a concession. That's where it's a double whammy. And I think if they were to really pivot, and I think they are trying to pivot back into where they are really strong at, which is EPCC contract delivery, I guess selling off that Cambodia asset is actually beneficial because now you're releasing a lot of this tied up debt and using that to prepare as working capital to secure more EPCC contracts. Because as an EPCC contractor, you definitely require a lot of working capital to actually finance buying the materials, finance paying your subcontractors, and just getting the project off the ground, right? And the order book as of I think, if I'm not mistaken, order book as quite recently, it's about 1.8 billion, and I think it's pretty healthy going forward, because on a revenue of about 700 million per year, if an order book of about 1.8, it kind of like, if you aggregate it in a simple way, you kind of have 2 or 2.5 years of projects going forward on a revenue of 700 million, right? And I think they're poised to hopefully deliver these projects, and I hope that they can get themselves on a better footing rather than this concession model that have tied them down for this many years, and hopefully investors can actually look at it from that angle. So what is the future prospect of Pestech? And by going through briefly their financial numbers just now, it does look grim, but going forward with a lot of electrification, EV of vehicles, even going renewable, transmission lines remain the same, and that is one of the core expertise that Pestech has, building those transmission lines in Cambodia, hundreds of kilometers of them. Definitely there's engineering expertise that can be leveraged to build transmission lines elsewhere. The other thing is they are also pairing up with other JV partners to actually build charging stations. However, that is not as scalable or as huge as what they've infrastructure projects of utilities that they've built in the past. And therefore, even though they may be facing tailwinds there, I mean getting the push because of government policies to go greener, but it doesn't really move the needle for Pestech. What really moves the needle is huge electrical engineering infrastructure and utility projects. So, by them going back to that, hopefully, it can actually push them into more tailwinds rather than headwind challenges. And more importantly is this, they do have a smart product or digital product solutions division. And hopefully with smart metering, hopefully with smart grid monitoring and all this, they can actually grow that. I think for me personally, I think that's a very scalable business if they do get into creating right products and solutions for the grid, because they're already building these transmission grids. Last but not least, risk. Any investment, we always look at the downside risk. In terms of, I think 52-week low pricing, it's definitely right at the bottom of the chart. So in terms of entry, obviously we look at valuations of a PE of more than 20 times. I personally think it's still quite expensive, even though it's dropped so low. Until I see, probably a change in their operating cash flow turning into something positive, then probably it's something that investors may consider as a pivoting moment of that turnaround. Secondly, I think as an EPCC contractor, even though that's what I think they should be doing, and I think they are, EPCC contracts also come with their risk, because you bid 10 contracts doesn't necessarily mean you win 10. So, but they do have a high success rate, probably I think about 10 to 15% if I'm not mistaken, and it's still a very lumpy kind of revenue generation for the group. So therefore, I think when they went into the concession, they were hoping for some sustainable, some retaining or recurring revenue, but did not really turn out well. And then with them going back to EPCC, then you have another risk, which is lumpy revenue generation. So you can't kill all birds with one stone. And I think those are the two main risks. Last one more risk. Even if they get the project, execution risk is always a risk for any EPCC contractor. But with their track record, I think that risk is actually minimized because they have built that years of expertise and experience. But then again, it still remains a risk. So 3 main risks. Going back to EPCC is lumpy. Always have to win contracts, and your hit rate, it may be between the 10-20% you consider very, very good already. Second thing is now they're moving out of the concession business. I think the risk of debts piling up, interest payment piling up has reduced by them selling off this one subsidiary. And the third risk is obviously project execution risk, and it's something that any EPCC contractor will face. But because of the track record, I'm pretty sure this risk is actually minimized. So there you go, my thoughts on Pestech. Hopefully this video has benefited you, and if it did, hit the subscribe button, hit that like button, share this with more people so the YouTube algo can spread this message more broadly. And last but not least, hit that notification bell so that you know the next videos are out. Hopefully I'll see you even better in the next video.